cierre de la renta variable europea y aprovechamos también para poner la mirada internacional también de nuevo en el aspecto que presentan en estos momentos los mercados emergentes. Hay una gestora, Robeco, que apuesta fuertemente por ellos, no solo este 2023, sino de cara al medio y largo plazo. Hablamos con Arnout Van Rijn, es estratega de soluciones sostenibles multiactivo de Robeco. Arnout, thank you so much for having us a few minutes.
Thank you.
Arnout, according to your vision, emerging markets now offer the most upside potential, continue to, as economic problems continue to grip developed markets. Which are the key points that make emerging markets now this attractive?
Yeah, it's quite interesting. Of course, there's been a lot of market events over the last couple of days, particularly in the US banking system. But in emerging markets, everything is quiet. And that's been exactly our case why we have decided at the start of this year to start moving some money away from developed equity markets into emerging equity markets, because we really don't see as many macro risks there. As you know, and when the COVID crisis hit, there's been a lot of money printing going on in the Western world, in most of the emerging markets, so that would include China, Korea, but also in the Latin American markets. There hasn't been that much money printing. So what you see now is that, yes, these countries have also had some issues with inflation, some more than others, but the inflation problem is now largely under control because there hasn't been excessive money printing like we've seen in Europe and the US. So that means right now you have much more scope for emerging markets to actually start showing some more monetary easing, i.e. lower interest rates, because so far policies have been quite tight. But now that inflation is under control in those markets, they can also start to ease those policies again. And this is a much better outlook than what we see for the Western markets, where we still think that inflationary problems will continue to haunt them, and therefore that there won't be much room to ease monetary policies. So that's been an important reason for us to consider emerging markets to be more attractive now than developed equity markets.
Arnout, you mentioned Silicon Valley Bank collapse in the US. Are emerging markets exposed to a systemic risk?
No, I wouldn't say so. So a lot of the speculative money that went into, well, for instance, the cryptocurrencies, but also into private equity and venture capital, that's been mostly a US problem, and to a certain extent may also have been a European problem. But in most emerging markets, and China being a case in point, nothing of that sort has happened. Actually, things have been quite orthodox in the way they run their policies, and therefore they won't be very exposed to any sort of fallout of what I consider is still a result of too much money printing in the Western world.
And can emerging markets move out of the focus of US dominance?
Yeah, that's an interesting one. Of course, what has been haunting them, because don't forget, the emerging markets have been really dreadful performers over the last decade. They've really underperformed Western markets, and particularly the US equity market, mostly also because of that strength in the US dollar that we've seen. And from here on, looking forward, we believe that the strength of the dollar will start to abate, and that should really also help emerging markets. So that period of dollar strength has been a headwind for them. If that's now turning into a more weaker dollar period for the next couple of years, that's going to be an enormous help. And in our 5 years expected returns documents, we've also highlighted that we think that the dollar is about to roll over, that you've seen the peak in the dollar, and we probably had that at the end of last year. And that's going to be also another factor helping emerging markets. And the final one, of course, I should mention is valuations, that after such a long period of underperformance, actually underlying the companies have done relatively well, but their multiples have gone to higher and higher discounts versus the Western world. So therefore, we are now looking at discounts of emerging market valuations of about 30%. So when you're looking at 17 times earnings as a multiple in the developed markets, we're looking at only 12 times in emerging markets. So there is a big valuation gap there now.
And at a time when developed economies are looking at inflation with some concern, are there worrisome inflationary pressures in emerging markets?
No, yeah, there is a few where inflation is higher than before. So India has still a bit higher than inflation than before, but the magnitude is far less, right? In the Western world, we've had zero inflation for a long time, or maybe 1%, and now suddenly it's 6 or 7%. Whereas in countries like India, they've always had 4 or 5% inflation, and now they have 6% inflation. So the magnitude of that problem is much smaller, and that's, I just mentioned India as an example, but that goes for other countries as well. When we look at Latin America, there we've already seen the peak in inflation a long time ago, and indeed those inflation numbers were higher than they've been before. But also we've seen interest rates to match. Right? Don't forget that in Brazil we now are looking at 6-7% inflation, and at the same time interest rates are at 13%. Whereas, yeah, in the US we have 6-7% inflation and interest rates are at 4.5%. So yeah, that's really different starting point, I would say, and it really goes in favor of emerging markets from here on.
What can we expect regarding the evolution of the dollar and its impact on emerging markets?
Yeah, so that dollar, we believe, will start to weaken from here. It's been remarkably strong for a long period of time. It also means that the dollar on our standards is actually on the overvalued side of things, whereas you can see that some of the emerging market currencies, and I would highlight there, for instance, the Brazilian real or the Mexican peso, are looking quite undervalued. So from that point of view, now that the rollover is there, which was also driven by sort of the money that was looking for high returns in the United States now pulling out. Now that that's past its prime, it does mean that we expect a weaker dollar from here going forward.
Mm-hmm. And Arnout, what is Robeco's main strategy in emerging markets? Which is the main focus right now?
Yeah, the focus is clearly on what's going to happen in China next. It's a large part of the emerging market portfolios that we run from here, and after they quite rapidly suddenly moved away from their anti-COVID restrictions, the economy has seen some sort of rebound, but it's still all a little bit hesitant. People are not out there in droves yet. But I know for a fact that many people are already planning to spend their next holiday in Europe. So you will see more Chinese tourists this summer in Spain also, I'm sure. But it does mean that China is starting from a low base. Last year was a terrible year for their growth. This year they're starting off cautiously and saying we're going to have about 5% growth, which I think is quite feasible. It does also mean that they're not going to pump prime that growth. They will be focusing on quality growth rather than going back into the property market or something. So that all sets a very stable stage, I would say, for where markets are going. The question in China will be, to what extent can companies actually benefit from that growth? What will happen to their margins? And there also a very positive picture from inflation that came out last week. There's only 1% inflation in China over the last 12 months. So it clearly shows that on the one hand, demand is not very strong. So that's hopefully going to come back. But also there's no cost pressures there to speak of. So that means that from our point of view, margins should be relatively steady in a country like China. And that's then, going to have good implications for the overall emerging markets universe.
Right, thank you so much. A pleasure.
You're welcome. Nice to be here.
Bien, mientras tanto, atención, que enseguida repasamos